Imagine you're about to buy something online for $200. Maybe it's a pair of shoes, a small appliance, or a piece of furniture you've been putting off. $200 feels like $200. Then, right under the price, you see another option. 4 payments of $50. Same product, same total price. Nothing has actually become cheaper, but somehow, $50 feels easier. And that tiny change in presentation is one of the most important things to understand about buy now, pay later. Because BNPL doesn't just change when you pay, it can change which number your brain treats as the cost of saying yes. Researchers have tested this directly. A 2025 study in the Journal of Retailing used purchase data and experiments and found that people spent more with buy now, pay later than with other payment methods. The key mechanism wasn't simply the existence of credit, it was the installment price. When the purchase was presented as smaller payments, people perceived it as less expensive. That doesn't mean 4 payments of $50 secretly cost less than $200. It means the smaller number can become the number that matters most at the moment of decision. Think about the question you ask yourself. Do I want to spend $200 on this? Feels different from, can I handle $50 today? The second question is easier to answer yes to, even though the purchase hasn't changed. And that helps explain why buy now, pay later has become so attractive not only to shoppers, but to the businesses selling to them. The familiar version is pay in 4. At checkout, a BNPL provider approves the purchase, usually collects the first installment, and the remaining payments are commonly scheduled every 2 weeks. The merchant generally gets paid for the sale, minus the provider's merchant fee. So the shopper gets the product now, the merchant completes the sale now, and the BNPL company gets paid through the economics built around that transaction. For many pay in 4 products, the consumer can pay no interest if everything goes according to plan. That is a real benefit. If someone already intended to make the purchase, understands the schedule, and has the money coming in, spreading a cost across several paychecks can make cash flow easier to manage. But merchants have another reason to like BNPL. Providers market it as a way to reduce friction at checkout. Block, the parent company of Afterpay, has told investors that BNPL has historically increased conversion rates and average transaction sizes for sellers. In plain English, more people finish buying, and some spend more when the payment looks easier to absorb. That brings us back to the $200 item. The most powerful part of BNPL may not be the loan itself. It may be the way the loan changes, the moment when you decide whether the purchase feels affordable. And increasingly, Americans are making that decision. The Federal Reserve says 16% of U.S. adults used buy now, pay later in the prior year. The reasons are revealing. 31% of users said their main reason was to spread out payments. 29% said it was the only way they could afford the purchase. And the pattern changes sharply with income. Among users with family income below $25,000, 40% said BNPL was the only way they could afford the purchase. Among users making $100,000 or more, that figure was 15%. So BNPL can serve 2 very different roles. For one person, it can be a convenient way to smooth out cash flow. For another, it can be the thing that makes an otherwise unaffordable purchase possible. And once that happens more than once, the psychology starts to change again. One $50 payment is easy to see. But imagine you already have another plan charging $35 on Tuesday, then $22 next Friday, then $48 the week after that, then a $19 payment for something you barely remember buying. Each obligation still looks small on its own. The problem is that your checking account does not experience them one at a time in isolation. It experiences all of them alongside rent, groceries, utilities, credit cards, gas, and everything else. CFPB research gives us a sense of how common that overlap can be. In its analysis of pay-in-4 borrowers, about 63% had multiple BNPL loans running at the same time at some point during 2022. 1/3 used multiple BNPL lenders. That doesn't prove those borrowers were in financial trouble, but it does reveal a structural weakness. A shopper can easily focus on one small installment while their real obligation is spread across several plans and providers, and missed payments are not rare. In the Federal Reserve's latest household survey, 26% of BNPL users said they had paid late during the previous year. Among those who paid late, 64% said they were charged something extra for being late. There is also a less obvious risk. Most BNPL users need to enroll in automatic payments. That makes repayment convenient, but it also means a scheduled charge can hit a bank account when the balance is already tight. 11% of BNPL users told the Federal Reserve that a BNPL payment had triggered an overdraft or non-sufficient funds fee from their bank during the prior year. So a zero-interest purchase can still create a cost somewhere else. And BNPL is no longer just something people use for clothes or electronics. The Fed found that 1 in 5 BNPL users had used it for groceries or food delivery in the previous year. That matters because it pushes the product beyond occasional discretionary shopping and into everyday cash flow. But there is an even bigger change happening.
For years, buy now, pay later became almost synonymous with 4 interest-free payments. That picture is now incomplete. Federal Reserve researchers estimate that major BNPL providers originated about $156.7 billion in U.S. consumer credit in 2025. Pay in 4 accounted for only about half of it. The other half came from other short-term and longer-term installment products.
And while the Fed estimates that more than 60% of total BNPL issuance carried a 0% APR, that also means a substantial share did not. Some BNPL-branded financing now stretches across months, not weeks. Some products charge interest. So the category has quietly become much bigger than the little 4 payments button that made it famous. It is becoming a broader point-of-sale credit system, and regulation has been trying to catch up with that evolution. In 2024, the Consumer Financial Protection Bureau issued an interpretation saying certain BNPL lenders should provide several protections similar to credit cards. But in May 2025, the CFPB withdrew that interpretation. That does not mean BNPL operates outside all consumer protection law. It means the federal picture is less settled than it briefly appeared, and states have been building their own approaches. California, for example, treats many BNPL plans as loans and requires providers to be licensed under its financing law. New York has gone further in building a dedicated BNPL framework. The state enacted a BNPL law in 2025, and in July 2026, its Department of Financial Services formally proposed regulations covering licensing, disclosures, disputes, fees, credit reporting, and consumer data. Those rules are not final yet. As of August 16, 2026, they are still in the public comment process, which is a useful reminder of how quickly this market has moved. Buy now, pay later started as a simple pitch. Get the thing now, divide the price, pay later. And sometimes that is exactly what it is, a useful, interest-free way to manage a purchase. The problem starts when the payment becomes easier to see than the price. Because $50 is not the price of a $200 purchase, it is one piece of the price. And when several pieces from several purchases start landing on different days, the small numbers can hide a much larger commitment. That is the real design lesson behind buy now, pay later. It does not need to make something cheaper to make it feel more affordable. It only needs to change the number you are thinking about when you decide to buy. So the next time checkout says only 4 payments of, look at the total first. Because an affordable payment and an affordable purchase are not always the same thing. If you like seeing the hidden systems behind everyday spending, subscribe to Costly by Design